The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 23rd terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We get to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon on this terrific Tuesday. I want you to know that I'm absolutely grateful for your presence, but more importantly, I'm here to serve you. So feel free. Pick up that phone. Dial on in, 877-927-6648. Would love to hear from you, of course, internationally, 727-445-1044. Then we can go put two sets of eyes, 4 eyes on any chart, any time frame it is that you are looking at. So let's go ahead and get this party started on Terrific Tuesday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading off about 154 points at 16,467. S&P down 17 points at 1928. NASDAQ composite off 43 at 45.27. Russell off 4 points at 10.17. Gold's up $14. Silver is up 7 pennies. Light sweet crude back $1.66. Lead the charge here to the upside. Newport Corp, individual stock-wise, up 51%, up $7. Valiant Pharmaceuticals up for the day, up nearly 10%. That's up $7. Cracker Barrel, that's up 6.50. That's 4.5%. Buffalo Wild Wings up $6. To the downside, you've got PTC Therapeutics, off 54% there. Priceline down 1%. That's $13. Google's off about $8.5. BlackRock down 7.88. Baidu is off $7 and change. AutoZone down 5. Biogen off a couple of percent. 2 3/10% down $6. So let's get started. What do we want to figure out here first with regard to what the market is communicating to you and I? Okay, let's go do that. So let's go take a look at kind of short term, see what we've got in store for us, at 1:09 in the afternoon. Let's start off by taking a look at, so we got clear signals that the market wanted to go ahead and pull back. I think you and I took a look at this yesterday, but for those of you just joining in, let's go take a look at 3 patterns here, 3 time frames, same pattern. This pattern works on each time frame. Form the bottom back here. Oops, I didn't mean to do that. It formed the bottom. Not that it was a big deal, but you can see prices moving lower. This is at about 9 o'clock in the morning. This is on last Thursday, I believe it was, February the 11th. Maybe it was last Wednesday. No, I think it was last Thursday, February 11th, if my math serves me correctly. And then we saw yesterday, right, we were doing the show, the candle that we were dealing with, this was at about 2 o'clock in the afternoon. We saw prices moving higher. We're doing it with less relative strength out there. Never a good sign. Did get that by the 4 o'clock session. We did get that little dark cloud cover. That's your weather forecaster saying, hey, it may rain out there. And, in fact, it's rained a little bit. Not cats and dogs, just a light drizzle when we take a look at the retracement. So that's a 5-hour chart. That's the pattern that was out there. If we take a look at our 2-hour time frame chart out here, same pattern, right? Price moving higher, doing it with less relative strength out there. Same pattern that was down here at the bottom. So we know we want to go ahead and pay attention to those patterns when they pop up on our screen. And voila, we're down to the 30-minute time frame chart. Same pattern. Now, the 30-minute time frame chart gave us a little bit earlier signal, right? Earlier than a 5-hour chart. We're right now seeing that we had that little dark cloud cover, and that was at 2:30. As you know, I believe you know, my clients and I, we had gone long for a second time in about the past 6 or 7 trading sessions inside of the NQ. And then because of these patterns here, right we did what we know, right? Doing what you know and know what to do are two different things out here. So what do you think we did when I got off the air at 2 o'clock, since we were covering all this stuff? That's right. We went ahead and exited our trade up towards the session high inside the NQ. Now, where are we at now in the markets? Well, what we can see here is that inside the NQ on the 30-minute time frame, what it has done is it's completed an A to B equals CD to the downside. Now, the CD leg here is relatively strong, but nonetheless, the bulls, the cavalry, they did arrive. They came in right as price was hitting this 41.66 area. Remember, we use this as a guideline, not as an exact price. The exact low out there was 41.65, so off by one buckaroonie out here. We did get a nice little bullish engulfing session that took place at 12 noon. A little bit of follow through with the hammer candle at 12:30. That tells us that the bulls have arrived. That says that they really are trying to protect this 41.66, 41.65 level. Now, as we take a look at this chart here, and I'll switch over to my other platform. It's just easier for me to draw the retracements. It's easier actually for you to see them as I draw them. So we're going to switch over. But what we can look at visually is we know we have a Gartley buy pattern that has set up and has confirmed in the 30-minute chart for the NQ. So what should you be anticipating? You should be anticipating one of 5 possible outcomes right now inside of the NQ out here. What are those 5 outcomes? Well, we know outcome number 1 is what? That's right. It's the dead cat bounce. Let's come over. Let's take a look at the 30-minute chart out here for the NQ, and let's go figure out where that price objective is. Looks like we're probably nearing it, or we're at it as we speak right now. That is objective number 1. We're going from the high yesterday at 2 p.m. all the way down to the low here this morning. No, we're not near it. Well, I can't say we're not near it. Let me tell you where we are. We're trading at 41.82 and at 41.91. That would be your 0.382 retracement. Seems likely. We have a looks like we have a new profile out, and boy, how about that? So you got a new profile, and the point of control is sitting. This is the 30-minute chart that we're looking at. It's sitting right at the bottom of the box. Boy, we said 41.65 is an important level of support because the cavalry came out. When we take a look at horizontal levels of support and resistance, invisible but made visible. We take a look at our market profiles out here. You got the point of control and the bottom of the box at 41.70. Boy, that bottom today is a very important level for us to be paying attention to. Not that the market can't punch through it, but if the market closes below it, that cavalry will have just been crushed and run over. It will be global thermonuclear trading war out there. So key level of support. This says that if price can take over the 41.92 level, so that's the bearish side, because we know we've got strong support. So we're going and you're going to ask me, well, where's price go if it breaks that level of support? Well, the price projection below that is 41.52. Below that is 41.34. We could take a look at retracement levels. In fact, let's do that. So we know right here, with regard to the Gartley pattern that's set up, let's take a look at what kind of Gartley was. And this is going from the low at about 9:30 on the 19th up to the high out here. So it was almost an exact 0.618 Gartley. Let me just go ahead and do this. Let me go ahead and I'll shut that one down. We're going to take a look at the retracement that took place here earlier. So we're going to go from the low. That was at 9:30 up to the high. What do you got here? The exact 0.618 would have been 41.64, basically. So you got a Gartley sell. Let's go back, take a look at those possible outcomes so that you can plan your trading day. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 162. S&P is off 18 points. So, we've got a great pattern here for us to be paying attention to help us understand what the market is doing. We're looking at really both sides of the trades. We both need to do that at all times out here. We've got a nice little Gartley buy pattern that is set up inside the NQ, been confirmed in the whole shebang out there. We know that moving below 41.65 in the NQ, when I say moving below, I mean closing below. Spiking below it, no big deal. But actually closing below 41.65 says that this Gartley will have failed and price would go down to the next level. Let's come back to that in a moment. At this stage here, level number one of where price needs to get up to is about the 41.91 level. Now, at the bottom of my screen here, I'll just go ahead and expand it up just a tad. We know this is our price oscillator. We know this is the difference between two moving averages out here, right? 19 and 39. It's not the day, it's the period, right? It just goes back and takes a look at the last 19 candles, the last 39 candles out here. Now, when this price oscillator is below the zero line and it is falling, it's very bearish out here. And that's where we're at as we speak right now. So the question is, this is really helpful because we took a look at three patterns, three different time frames with topping patterns that are out there. We can go take a look at that, and we will perhaps on the ES Mini. We're going to see the same setup. We'll see that inside the Dow, the same setup as well. So, really important signals that are out here when we take a look at what the market is communicating to you and I. If, in fact, this price oscillator can turn around, the bulls run in, we know the areas that they're protecting, but they don't seem to have a whole lot of momentum behind them. Now, the levels that you'd be watching for, 41.92, 42.07, 42.19 on any moves higher out here, if, in fact, the bears are unable to stampede the bulls' protected territory of 41.65. Now, if, in fact, the bears are, I might have said bulls, or you know what I'm referring to. It's hard for me to walk, chew gum, and actually speak at the same time out here, but I do the best I can. Now, if we take a look at, I'm going to take this price oscillator tool and move this, scrunch it just a bit, technical terms, so we have more space to actually take a look at. So where would price likely head to if in fact it really does break through the 4165 level. I gave you a couple of A to B equals CD down projection, but when I take a look at this chart out here, it's very clear to me that the next level of support on the way down is going to be down in the 4122-ish type range out here. It's a swing point that we're looking at 9:30 in the morning. This is back on February 19th. In fact, one could say that price will head down there, and we could have just really rather large consolidation. Now, you can see here something that many people might call a double top. But what's a double top? Well, if you take a look at the swing point here at 6 o'clock in the morning on February 18th, you can see price, in essence, made it back up there yesterday and gave it up. And so because it wasn't able to really clear that previous swing point, some people would call that a double top. Now, what a real double top is, we don't know if it's a double top or not. A double top is when your price makes it all the way back up there, and that's it, and it gives it up, and it gives it up, and it just heads lower. And it heads lower, and it takes out the prior swing point. That's a swing point that right now we have as target at the bottom in the 4120-ish area. Because what you and I don't know is whether this is a consolidation pattern from the 4120s up into the 4227. And if it is, that's a heck of a great consolidation size to be able to play out there. But if, in fact, we see this level out here get taken out from February 19th at 9:30, then that was a double top. And that says that price heads much, much lower. We'll deal with those price projections when we see whether or not this now, where is a good place to sell this market? Well, certainly back up at the top of the potential consolidation pattern, or one of those retracement levels, or maybe around the 4211 area. That's taking a look at the NQ. I know we've spent a lot of time on it, but you asked for it. No, I think it helps us to understand what's going on inside the markets as we speak right now. Now, that's on the 30-minute time frame chart. Let's go step up our game a bit. I don't do this too often, mostly because, to me, it doesn't have a heck of a lot of meaning, but I did get a question that asked if I would take a look at the ETF structures and the volumes and where things are trading to. So, being the good guy that I am, I'm going to do that because it was asked of me. So, if we go take a look at, let's start off by taking a look at the QQQ series ETF out here. Let's go see what we can figure out, what it's communicating to us. Now, right now, we've done volume. It's done volume about 15.7 million shares. A straight line math says that it does maybe around 28 million shares for the day. I don't know if it's going to keep up the same pace in the first 4 hours. Actually, let me see. Maybe it's less than that. I had 3.5 down here. 25 million shares is what it looks like it's going to do, give or take. Hold on a minute here. 15 point. I'll make it 15.8. 26 million shares. Okay. Enough of that. So what did the QQQ Series ETF do yesterday? Well, swing point-wise, it tested the bottom of February 1st. The bottom of February 1st, that's the swing point we're using, 103.23, volume of 32 million shares. Yesterday, tested it, rejected it, which means it tested the low, closed below the low, did it with light volume. That's 24 million shares. Ordinarily, you'd say that's a failure on price and volume. Can't bust them up. What's it going to do? Going to go ahead and try and bust them down. Now, what is it that it is doing today? Well, in the case of today, we can see that yesterday we had that gap up, right? You had the futures market basically gap up. Well, the futures market on Sunday actually gapped down by about 6 or 7 points. I'm referring to the ES Mini right now. And from there, it just simply went higher, zoomed higher up until 2 o'clock in the afternoon yesterday when we were on the air out here. So we had a gap up when it came to the indices opening at 9:30. Index ETFs, what do we have? We've got a gap up. Does that matter to us? Yeah, it's called a breakout. Yesterday's move higher, 24 million shares. Today's move back looks like about 25, 26, 24 million shares. So really moving back with the same kind of volume. This would be, we'll call it a juniorish type swing point, but we have a number of gaps out here. You've got another gap that was on February 17th. That had 41 million shares out there. So I would say we would more likely than not use that as the level to be paying attention to. We'll put a red line, a red horizontal line across really that level. So it looks like, maybe what the Qs want to do, here's that consolidation on the 30-minute time frame that we looked at. It's pulled back into 100.70. So what the Qs do not have is any kind of volume to the downside as we speak right now. Let's go take a look at the Russell 2000, the IWM. Let's go see what its message might be. It was testing also a swing point yesterday. Looks like it from February 1st. If we go draw a line across the bottom, this time we're going to go ahead and use our red line out here. Price actually closed inside that swing point yesterday. Light volume, I believe. Let's see. Volume of 28 million shares versus 33. So that was light volume. Today, if the IWM closes below 101.25, does it with less than 33 million shares, that's almost a foregone conclusion. It's going to do about 23, 24 million shares today. If it closes below 101.25, you would have two in a row failures on price and volume at a swing point. I hate using these ETFs to actually give you that message, but that would be its message. Let's go take a look at the SPY out here. Looks like we're going to have to do that. We come back from this break because Stevie apparently has been too long-winded out here. So we'll go take a look at the SPYs. We'll go take a look at the diamonds. We'll go take a look at that February 1st swing point. We'll figure out what it's trading into. It looks like the SPY needs to get below about 190, 184 to give us any kind of message, I believe. But we'll go find out when we get back from this break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 165. S&P is off about 19 points. We're looking at the SPY, by the way. We went to that breakout here. Just following up for Brian, that's asking me to take a look at the ETF structures, volumes, so that he can understand when we speak about swing points, and volumes, what it is that we are looking at out here. So we're looking at the level, and swing points, nothing more than where you start to see a change in trend take place out here. And so price has gotten back to that level, made 100% movable move. That's from the lows out here on February the 11th. The swing point was on February 1st out there. So we know that price is trading with inside that range. The February 1st swing point had volume of 136 million shares. What you like to see, if a swing point gets approached or taken out, you like to see it get taken out with volume. That would suggest that price should move higher. Move higher to where? Other levels of resistance. We can take a look at market profiles. We can take a look at retracements. We can look at other swing points, gaps, volume bars, and you really need to understand or take a look at all of those. But here's what it is that we know. Yesterday, the SPY actually closed above the swing point, just barely. By the way, that swing point high, 194.58. Yesterday, and 136 million shares out there, but only 103 million shares yesterday. Closed to what? 194.78. So 20 cents to the upside. Hey, you close above a swing point, says you can go higher, but you and I know, let's not get too hung up on the index ETFs out here, because they just don't work as consistently as they had in the past out here. That's why we take a look at the other patterns that are setting up, such as the ones that you and I looked at in a 30-minute, the 120-minute, the 300-minute chart, because they give us beautiful signals out here. And in the case of the SPYs, though, if you really want to go ahead and use it, what you would be looking for, because we've got the Qs and the IWM right now that has rejected that swing point from February 1st, light volume. What you need to see inside the SPY, though, is a close below 191.84. It's got light volume today, no question about it. 60 million shares. That says that the SPYs do maybe about 87 million, even lighter than yesterday. We could say it's pulling back, which it is, into the February 17th level at 136 million shares. So there's not a whole lot of conviction behind the move, but you do not have a failure of a swing point with light volume inside, you really don't have a failure. Yesterday was not a failure. Today you're just back inside that lower range, but it really needs to get below 190, 184. I say the meaning coming from the intraday futures contracts are going to give you better information. Now let's go finish this off. Take a look at the Dow Diamonds. It's off 181 points as we speak right now. The Dow Diamonds trading out of 164.20. Volume so far behind the move about 3 million shares. Says this does, well, let me tell you exactly what it says. 3.1. Says you're going to do about 5 million shares today. Yesterday was up with 3 million shares, so you do have some volume inside of the Dow Diamonds. The swing point that it's dealing with is February 1st as well. Yesterday was a close above that level with light volume, 3.4 million shares. Today you're back inside it. But what the Dow Diamonds will need to do, just as the SPY needs to do, is close below the swing point from February 1st. And that says 162.82 is the number. Again, the volume today looks like about 5 million shares. The volume on that swing point, 6.9. So if it did close below 162.82, then you would have a failure on price and volume, and it would say what? You can't bust them up. You go bust them down. You start heading back into the swing points from January 20th to February 11th. So I hope that that helps you out with regard to understand how at least Stevie would go ahead and take a look at swing points and volume and what it is that they mean. Now let's go take a look at some other things that are moving and grooving here in the markets. Let's go take a look at light sweet crude off of $1.58 right now. Let's go ahead and put our market profiles to give us an idea as to where light sweet crude is likely to trade to or pull back to. We know that price has been running into resistance, that point of control, that little fair auction area. These sellers, the snipers, are just simply hung right up there on that line. This is taking a look at the current contract for light sweet crude. That number is 33.46. That is the level that light sweet crude is really struggling to get above. So can't bust it up there. What is light sweet crude likely to do? Get down below the TAS market profile low. Otherwise, invisible support made visible by TAS market profiles. You're looking at $30.63 as a likely target area for light sweet crude to move back to. If, in fact, that takes place, our markets ought to move lower because we know about that correlating pattern that is out there. Just take a look at this. Eventually, this pattern is going to go away, but as we speak right now, it is in full force out here, so no reason for us to ignore it. Now, here's what we know about light sweet crude. You speak about swing points. Well, light sweet crude, I'm just looking at a 30-minute chart. 11 o'clock, between 11 and 11:30 on February 19th, they did volume of about 24,000 contracts, and it has been for the last couple hours trading into that swing point. It's been rejecting that swing point with light volume out here, as well as it's trading down to the bottom of its 30-minute market profile at 31.81. So if it cannot bust below 31.78, says you probably get up to 32.33. And if it can get above 32.33, then what you'll see is price move up to about the 36.28 level again, and that would be your point of control. That is what light sweet crude is doing as we speak at the moment. Let's go take a look at Goldilocks, see what gold is doing. It's trading up 12 buckaroonies out here at 12.22. What is it doing? It's just trying to suck in as many participants as it can before it takes them to the dry cleaner, the wet cleaner, the I told you so cleaner. And this is going to be interesting because we have the markets that are communicating that there's a top that's in place, or consolidation, but a top that's in place. And we know the markets here, I don't know if it's been a correlation or not, but the markets have basically been moving higher out of fear because people haven't known where to park their money. Treasuries, sure, maybe. Commodities. The only commodity that's really moved has been gold. Silver a little bit, but gold here. I still, and I think the line of demarcation, maybe it's 1201.40, the top of that TAS market profile out here, but I'm not buying into it. This is one guy that is not buying into, and I was long gold. I made good money off of the mining sector. Not that you can't right now. I'm just not buying into it. And so that's my view, and I'm sticking with it until I see otherwise. If we look at the silver up in nickel today, it's not doing diddly out here. And silver is trading at its point of control level on its daily chart. It really set up from a bearish situation. Looks to me like silver's headed back to 1458, maybe even lower than that. And there's a lot of people that are anticipating that silver is going to move lower. In fact, probably a lot of people that are now. You might not be you, but there are a lot of. When I say a lot of people, I should take that back. There's a lot of trading going on that says that silver is headed lower. And now how far? Maybe it goes all the way back down to the bottom out here in the 1360 level, but 1458 becomes our first target area, and that is in silver. So that takes care of those commodities. Oh, talk about currencies out here. The euro, Japanese yen, continues to trade lower. Maybe this is no longer the carry trade, but it's not a good sign for the bulls, that is for sure. Steve Rhodes with TFNN. Dow's off 180. S&P is down 20 points. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, Dow's off 194, S&P's down 22, Composites off 55 points right now. Let's take a look at some of these individual equities and see what they are doing in the market. Let's look to the upside. You've got Newport Corp, 51%. What do we have out here? It must be a buyout. Yeah, it must be a buyout. So let's just simply skip over Newport. Let's take a look at Valiant Pharmaceuticals. VRX is the ticker symbol, trading out at 82 bucks as we speak right now. The only potential positive here is yesterday had volume of, where'd it go? Oh, there we go. The yesterday had volume as this thing was pulling back into a swing point, 31 million shares coming down into the lows that only had 11 and 13 million shares out here. So, on a bounce, Valiant can get to 88.02, maybe even 96.42, but it was pushing lower with volume yesterday. Suggests that it'll be back down there some point soon out here. VRX, the ticker symbol. Let's take a look at Cracker Barrel. CBRL is the ticker symbol. Nice move out here today. So they were out with numbers earlier today. Let's go see where this thing is moving into. Well above its daily TAS market profile. Let's go ahead and put the weekly lines on the chart as well. See if there's some kind of hidden, not so hidden resistance once we go ahead and turn them on. And the answer is no. So no resistance other than all the way back up at its swing point high. I don't know if it's the all-time high, but we're looking at this thing had created, looks like an island top. Let me see here. The bottom of the trading day from July 10th, 155.59, and that high was 150. Well, wait a minute. The low, 158.41 versus 158. Yeah. So how about that? So let me do this here. There was an island top that formed inside of Cracker Barrel. Now look at an individual equity versus a index ETF versus an ETF that follows a underlying instrument like a commodity. When you see these island tops and bottoms, inside patterns. In fact, we got to go take a look at J.P. Morgan, see what it's doing, because it had or has a island bottom out here. So we want to take a look at it. But look at a Cracker Barrel. Let me put this back in a monthly. and see if they. So this was at the all-time high on its daily pattern and created, one of the most bearish patterns that are out here. So number one, this was testing a previous swing point from March 20th. That had volume of 411,000 shares. It was tested with 464. You would have assumed, hey, that's a great thing. 450 on the following day. This thing's going to move higher. However, what this actually did was it gapped down with about 600,000 shares, 666. So it even had the devil when this thing was gapping down on the trading session of July 15th out here. But it created that island top. And, on August 24th out here, it printed a low of 117.95. No idea how many shares actually sold, if any, really down at that level out here. But it doesn't really matter because price back on the trading day of January 15th got in essence down to those lows anyways, the 118.01 area. So that says that the resistance zone really now, the only resistance zone, of really significant consequence inside of Cracker Barrel is back up to the 158 level. So it should be able to make its way up there. We'll see if it can, in fact, go ahead and repair that window, close that island reversal, and go rescue Ginger and Marianne, the Professor too, and I guess Gilligan and the skipper. Now let's go take a look at J.P. Morgan, because it wasn't too long ago, maybe about a week, when it created an island down. Now take a look at that for island patterns out here. So nothing more bullish than a failed bearish pattern. Nothing more bearish than a failed bullish pattern. I thought I would just use one of those pauses out here. And if we take a look at J.P. Morgan, even though it's pulling back today, and it's pulling back with pretty good volume, 17 million shares, it does have that island bottom out here from February the February 11th out here, the 20, February 11th out here. So you'll want to be paying attention to that. You get below that, and that's not a good thing for J.P. Morgan. If we take a look at market profiles inside of J.P. Morgan at the moment, we'll see the daily and the weekly. Looks like price is pulling back into a potential level of support at about the 55.99 area. Let's look at some other equities here that are moving. Let's take a look at Rogers Corp, Roger Ramjet, ROJ. ROG is the ticker symbol. I'm not sure what to get at ROJ, but this is up 13%, up $6. Has some nice volume behind it. Looks like they are out with numbers as well. This looks likely that it's going to head back to its previous swing point from the trading day of December the 3rd, and in the $56 area. But nice volume behind its move out here right now, printed out at 51.49. Ticker symbol there is ROG. Buffalo Wild Wings, BWLD. Let's go see what they're doing. Up about 3.5%, up $5 out here. This is the daily chart that you and I are looking at. This thing has a level of resistance. You can see those gaps. We're going to turn off our market profiles, make it a little bit more visually easy for us to see. Now, this chart here has got gaps just simply all over the place. So this is kind of a schizophrenic chart out here, as it comes out with all these gaps cannot be earnings. So this thing just has, how do you use those gaps? Really great question. They still, I think you got to use them as support and or resistance areas out here. Right now, what Buffalo Wild Wings is trying to do is get up back to its swing point. Get up back to it. Whew. I think I need to go repeat grammar school. Nonetheless, December 9th, 563,000 shares is probably where it's headed to, the 161.53 up to the 163.70 level. BWLD is the ticker symbol. Now, to the downside out here, leading the charge, it is Priceline, PCLN. This thing here had gapped up. You're going to want to watch this in case it creates an island top out here. But big volume behind that move on February the 17th. Just really a sideways move as we speak right now. You've got PTC Therapeutics. Well, that thing, they must have, I don't know what they've done out here. They've got a nasty letter from the FDA is what it looks like. So 19 million shares to the downside. Where is this thing headed to? Is anybody in the money in this equity? It appears probably not. That's too bad, because this thing had traded. Somebody's probably got this at about $75 or so. The high was $78.72. It's trading at $12.20 as we speak right now. Does not look good for any holders of ticker symbol PT, CT, PTC Therapeutics. You try saying that once fast out here. Let's go take a look at what else we have moving percentage-wise to the downside out here. We can see a number of farmers. Let's go just take a look at what is the IBB doing here today. The IBB being the biotech sector inside of the NASDAQ. Let's go see what this thing is doing, trading into, if anything. Not much. Really just a sideways move, 872,000 shares out here. This thing had moved up with about 2.6 million shares back on February the 16th. So kind of a sideways-ish type move. And that, again, is the IBB biotech sector out here. Let's take a look at also moving to the downside. Let's go take a look at Lear Corp, LEA, down 5% off about $5. See where this thing may be headed to. It's trading back towards the August 24th level. Now, Lear Corp, LEA, had volume back there of, I'll let you know, 1.3 million shares. And as it moved into this area, it was moving in with 1 million shares, 1.3, again, 998, 1.4, 998,000, 1.4 million shares. Looks like Lear Corp probably headed back into this 98-ish type area. Steve Rhodes with TFNN. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's off 187, S&P's down 22, NASDAQ Composites off 54. So when we began the show, we were looking at the 5-hour, the 2-hour, the 30-minute chart for the NQ. Let's finish off the show by taking a look at the ES Mini. Again, really the same patterns out here, right? Let's take a look at the ES as was making its high yesterday. Same type of pattern at the high that was previously at the low. So you wanted to pay attention. It was, again, another reason why my clients and I decided to exit that long trade that we had inside the NDX and just go ahead and collect our shekels, and add that to the profits. We went ahead and took a look at the 2-hour chart in which we began the show. Well, the 2-hour chart for the ES Mini. Hey, forget about the wave counts. You can see price moving higher, doing less relative strength out there. Again, the same pattern at the high as it was at the lows. And then on the 30-minute time frame chart, you got the exact same thing. Now, in the case of the 30-minute chart, just like the NQ had completed a Gartley buy, so too had the ES Mini. You had a almost an exact move, 1918.75, and 1918.75 is the exact 1-to-1 A to B equals CD pattern when this completed. Nice little bullish engulfing candle at 12 noon. Nice little hammer candle at 12:30. We can see that price is pulling back into this level. If 1918.75 fails, 1913.50 becomes the next target area. If we go from here, 30 minutes, and we go take a look at the 10-minute time frame chart out here, and we look at the ES Mini, we'll see that as it was making its lows at 1918.75, the volume there, and this was at 11:10, between 11:10 and 11:20, the volume on that move lower was 44,577 contracts. And right now, with 4 minutes to go, there's only 7,600 contracts that are taking place. We have not seen a test of that low, so you don't know. That's 1918.75. But what we can say is price has been moving back into the lows that were formed earlier this morning, this morning, a few hours ago, and it is doing it with what? With less conviction out here. So it doesn't look like the bears have enough to go ahead and bust out these lows. If they are unable to bust out these lows, what you could anticipate is the ES Mini trading up to a level of 1924. Now, what we're looking at on our 10-minute chart out here, we're looking at our TAS market profiles. This doesn't tell us who is in control. Well, in one sense, it tells us who's in control. It says that the bears, in essence, are in control because we've got a box that formed underneath the prior box out here. But with regard to, the point of control versus the top and the bottom, it's basically dead smack in the middle. So we don't know. This is no bias to either side. Moving lower, doing a lighter volume, probably not going to be able to bust out those lows. Says you move back at least to 1922, maybe 1925, the top of that box out there. So that's taking a look at the 10-minute chart out there. What should we finish the show with? What should we finish the show with? Let's go back and see if there's anything that pops out. This has been a slow request day out here, other than taking a look at the ETFs. Big moves down inside of the currency pairs out there. The euro, Japanese yen, just huge move to the downside. Let me actually put that on the screen out here. Let me put a little bit longer term chart for the euro, Japanese yen. Let me put the weekly, get a feel for where this thing may be headed to. And it looks like about the $1.15 area. You're trading at 123 out there. Ordinarily, this is a really bad thing for the markets, but the correlation that works better at this stage of the game is the one that is as much as mind-blowing as it is one with regard to light sweet crude. It, too, not able to bust out its swing point out here. So, the polar, all I can tell you is I'm handing it off to you, and the sellers must be waiting for your show to start. So stay tuned, folks. David White will be up next. I'll see you tomorrow on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.